Hello friends, welcome to this investment banking tutorial from WallStreetMojo. In the last video, we discussed what are the things we would be discussing as we go through this program in detail. But before we understand what investment banking is and how do investment banks function, we must have an idea of how it differs from a commercial bank or a retail bank and how do these commercial banks or retail banks work. The first thing, therefore, we need to kind of understand is what is a commercial bank and what are the aspects of commercial bank that differs from the investment bank. Let's now begin with looking at what the commercial bank is. Commercial banks are financial institutions that you know better off as retail banks. An example of commercial bank or retail bank could be something like Citigroup or JP Morgan Chase Bank. Then we can also have HSBC, and there's a whole list of, commercial banks. But the primary question here is that what are commercial banks and what is their responsibilities? How do they earn money? So let me put this in a very, very crude example. Let's assume that this is a commercial bank and there are two different set of parties involved. Think of you and me. When we have excess cash, we kind of deposit that money in the bank, right? So we are essentially depositors. A bank is a place where they collect money from various depositors. These depositors can be individuals or they can be corporates as well as business guys. So essentially what we are saying is that the banks actually collect dollars from these depositors. But what does the depositors get in return? Firstly, they know that the money which they have deposited is safe, right? And secondly, they are assured of earning something called as the interest rate. We can call this as interest on deposit. So let's say that you have deposited $100 and the interest rate is 5%. The bank at the end of 1 year will pay you not only $100, which is your initial amount, but you will also have $5 in your account, which is your corresponding interest payment. That makes it $105 at the end of 1 year in your bank account. Now, this is one side where bank actually sources money. The second is basically where they deploy this money. And how do they do that? The answer is loans. Loans in the form of, home mortgage loans, or there could be individuals who would like to have car loans or personal loans, or it could be any other format of loan. So there is commercial banks that offer loans to individuals as well as loans that are also given to corporates. So what we are essentially saying is that banks actually collect money from depositors and give them to those who are in need of money. But then what is the benefit for the bank here? The benefit for the bank here is that they earn an interest income in this case. So the banks actually earn money by ensuring that the interest on loans that they earn is greater than the interest on deposits that they give. The interest income should be more than the interest expense of it, right? So if the bank is able to manage or ensure this, the bank will be profitable. So traditionally, the bank has been doing this kind of business where they are giving loans and this is something like a low risk kind of business and it is called as a commercial or a retail bank, right? So with this understanding of a commercial bank, let us now move forward and look at what is an investment bank. First and foremost, please note that the investment banking is different from the traditional or the commercial banking which we have earlier referred to. Investment banks do not take deposits like the way traditional bank does, or they don't actually pay interest or guarantee safekeeping the money of the depositors. So what do they actually do? To understand investment banking better, let me give you an analogy with respect to a property broker. Now, who is a property broker? Let's assume that on one side there are buyers of an apartment, and then on the other side there are sellers of an apartment. So there are buyers as well as sellers of the apartment. Now, obviously, they would like to transact and make this market happen. Now, on the one side, when the buyers who are individuals who are seeking the sellers, sometimes, in fact, many a times, it becomes very difficult for the buyers to do all the due diligence with respect to the apartments, or maybe look at the financial considerations and negotiate them. In fact, sometimes searching for apartments is also a problem for them. So what happens is that these buyers may actually get in touch with people called as property brokers. Now, these property brokers will actually do a couple of tasks like they would identify how many sellers are there in the region. They would communicate and kind of make a checklist of the legalities associated with the apartment. They will do the complete due diligence and also look at the financial considerations and research. And depending on the requirements of the buyer, they would kind of suggest the properties. So the property broker is someone in between who is doing all these tasks. Now, how do these property brokers normally make money? They earn through commissions, and these commissions are primarily on successful transactions. So let's say if a buyer has bought a flat or apartment from a seller at $10 million. So a certain percentage will actually go as a part of earning for the property broker in the form of commissions or fees. So I mean, this is how a property broker functions. Now, having understood how a property broker functions, let's understand the functioning of an investment banker. I call an investment banker a financial broker here. So instead of property broker, I'm calling this as financial broker. What his job essentially is to make the buyers on one side and the sellers on the other side meet somehow. Now, I quickly changed the definition of buyers and sellers here in this context because I'm talking about investment banking here, right? Now, think about a company, okay? Instead of buyer or seller, we can call it a company. Let's name it ABC that wants to raise funds. Raising funds means that they require finances, let's say for making investments and expanding their business from a very small city to having a global presence altogether. So for that, they require funds. So obviously there are two approaches available to them. One of them is that they can approach a bank, and second is that they can raise equity from the market through an IPO. So doing an initial public offering means that raising money from the market. So let's assume that they don't want to go to the bank via a debt route for raising further funds. Instead, they're evaluating equity dilution. By equity dilution, they mean they're ready to give a share of their company to a certain set of investors via an IPO. Now, if a company ABC wants to kind of go ahead with this, they will find it really tough because of a couple of things. Like there are legalities associated with it, which they might not be aware of, or even if they understand the related process, then they may not even know how to execute it. Also, at what price or valuation of shares should they be available to the investors? Again, they may not be aware of that too. So what options does company ABC have? So they basically contact someone called an investment banker, and the role of an investment banker here is to do all of these tasks, to check all the legal options, look at the processes, perform valuations, and also identify all the set of investors for this IPO. The investment bankers are sophisticated financial brokers. In fact, they're connected with the investors and they help these set of companies raise funds, and they also understand the checklist of raising funds to an IPO. So this was a very small example where, investors are on one side and the company is on the other side. So the next question that arises is, how do investment bankers earn money? Investment bankers earn money by commissions, like the way property brokers used to earn. They earn commissions on the amount of funds that are raised for the company ABC. So this is one of the services of investment bankers. The other set of examples could be related to mergers and acquisitions. So let's say there is a company called ABC and they want to merge with another company called DEF. Now, the problem with these two set of companies would be that they may not be equipped enough to handle all the regulatory aspects of the merger, as well as do the appropriate calculations in terms of valuation or prepare financial model. So what investment banking firm does is that they act as an intermediary and advise on the possibilities of the merger, why it should happen, what are the possible synergies, etc. And in fact, a critical aspect of investment banks is that they help largely in negotiating the price. So, if the price is high, then how do they talk to the clients to make the two of them, buyers and sellers, meet at one point? So they are expert negotiators as well. For that, again, they charge commission. So as a result, they charge a certain amount of commission, let's say 1%, 2%, 3%, etc. So in a nutshell, think of property brokers, and property brokers' role is just a kind of, help the buyers and the sellers identify the most suitable deals and be in between. Property brokers actually add a lot of value by helping the buyers search as well as the sellers also to identify the buyers. Likewise, investment banking also does the same and adds a lot of value by bridging the gap in between. We hope you had a good time during this lecture and exploring the differences between what is an investment bank and a commercial bank. Besides helping companies raise funds or in merger and acquisition activities, investment banks do a lot of other things as well, which we'll be discussing in the following lectures in the upcoming videos. So stay tuned.
Conclude today's discussion. A big thank you to everyone who tuned in from the Wall Street Mojo team. But hold on, the financial adventure continues. The next episode unfolds on Tuesday, and we're super excited about what's in store. Make sure to subscribe and turn on those notifications so you don't miss out on the financial insights coming your way. Until next time, this is the Wall Street Mojo team signing off. Stay informed, stay engaged, and stay Wall Street Mojo awesome.